Another week has passed, and here we are after kind of a wild week, one of the wildest weeks we've seen in a while. And what a great time to bring on a special guest. We've got Gianni with us today. So it'll be Brandon and Gianni and I. Good morning, Brandon. Good morning, Gianni.
Good morning.
Hey,
So
well,
what's
that
so
was
you
kind
know
of a dud. I'm all excited, and Gianni's like,
yeah,
"Hey,
let's go for it.
I'm
morning,
zen now. I only
everybody."
had one cup of coffee, so I'm in a good place.
No, but Gianni is a harvester. I mean, like he's not only harvesting stocks, he's harvesting vegetables. Well, is zucchini a fruit or vegetable? Are we
Well,
horticulturists or are we botanists?
It's an
well,
abomination.
it does have seeds when it gets big enough. So I suppose in theory it would be a fruit.
It's a vine grown and has seeds. It's a fruit
Yeah.
and an
Well, we had
abomination.
this. I've had this debate before. Tomatoes. It does depend if you're a botanist or a horticulturist. There's different attributes to define
Yeah.
fruits and vegetables.
Mm,
So
mm,
there's that,
yeah.
right? So
Wow, that already took a left turn. See what happens when we bring
I
Gianni on.
Can't
This
help
is
think it's
what
my
happens.
problem.
Yeah, okay, we'll blame you. So, kind of a wild morning, wild week. Earnings really driving that. I mean, it's kind of
Yeah.
an interesting shift, major pullback. We've just erased really 7 weeks of price action. What do you think? Is this the beginning of the end? Have we reversed? Have we finally reversed?
Well, I mean, you saw yesterday we tried to find a bid, right? We tried to rally and ultimately staples were an early leader and we had utilities up there and all of a sudden, I mean, just the bond market just didn't quite cooperate. Yields began to rise, and then all of a sudden we started to see things kind of come off the top and then fade into the close. And so, I'm just not sure we're quite done yet in terms of the selling, but we're trying. We tried yesterday. We're trying again today off the open. Is third time the charm, second time the charm?
Well, and I was referring to, are we beginning the end of all the market? Are we going to continue to fall? So I'm not saying this is the bounce. I'm wondering if we had enough momentum. Are we going to see a lot more downside, or was the smaller day the, as you talked about, the attempt to recover? And Johnny, you, before we even started, you were commenting that when who does what now? We see the bottom. Did we already see
Well, the
the
CTAs when they start to pile
yeah.
onto the shorts. Yeah.
Yeah, so for those that don't know, CTAs are commodity trading advisors or commodity pools, um, but they don't have to be limited to commodities. And so when they start piling in, and what was the number you saw? I know you're talking about
It was in the billions. It was like a huge short position that's being
billions.
built. Yeah.
Yeah. So very fascinating to see that. And look where the VIX is. Holy cow.
Yeah. We finally have seen a little bit of volatility. Again, we saw the VIX did not rise much at all yesterday. But look, I mean, when volatility rises, if you're a premium seller, this creates opportunities. So for our members, Don sent out an inflection point spread yesterday, selling a put, buying a hedge, and selling a call. Because when you have higher volatility, you get to sell further out of the money for the same premium. So that was a good opportunity to start to build a position by selling some options and hedging the downside. But again, is this a race to the bottom or are we there yet? Look, I'm kind of with you, Blake. I still think there's more downside yet until we start to see more correlated selling in the market. We just haven't seen that. Maybe 50% of the New York Stock Exchange, maybe five times more selling stocks than buying stocks in the advanced decline. We're not really reaching those levels that say, hey, on the VIX and the advanced decline that says this is the bottom. But as we know, markets can bottom whether you think they should or not. So Gianni, what are your thoughts right now? You feel like we're kind of nearing that point, or are you willing to kind of add risk in lieu of just excessive bearishness?
Well, I think the risk has to be placed with a lot of nuance. So when you saw the big down day on Wednesday, you actually saw around 1/3 of the S&P 500 stocks rose. And that was one of the best breadth days for the S&P on a 2% down day, going back all the way to 2000. So I think the bigger story here is that tech leadership is vulnerable to losing its position. And that says a lot about where we are cyclically in the market, right? Because when tech doesn't lead, it usually means you're closer to the end than the beginning. So I actually wouldn't be surprised to see a scenario where the Dow goes up and makes a new all-time high, but the NASDAQ may have, in fact, peaked already. So that's what I'm kind of looking at is, for a potential divergence between the indices. I mean, you think about the components, the Dow, a bit more defensive compared to the NASDAQ, high flying, high beta names. And if you are going to see a flight to safety, you mentioned staples and utilities. I mean, the Dow is kind of the index to reflect that. So that's kind of what I'm on the lookout for. I think we're out of the easy money environment, and that you might see more defensive elements of the market do better.
Well,
You
you and
saw
I,
that the trade fade in the XLP yesterday, right? We tried to bounce, shut the door on us. Go ahead, Blake.
oh no, I was just going to say, I know all three of us are currency kind of people, and I know that you look at the Aussie, I look at the Aussie, you look at the yen, I look at the yen, and now I look at the Aussie yen
Yeah.
as a kind of a substitute as my greed and fear index. And I've done this, as Brandon knows, literally for 20 years. It's been such a good tell. And if you look at the Aussie yen, and I don't know how this fits into your view as far as combining it as a pair, Gianni, but how do you deal with that where we're actually picking up speed? The candles are getting bigger and bigger and bigger week over week over week in the
That's a big
greed, what
problem.
I'd consider fear index, and lack of greed or lack of growth.
Yeah, no, that's definitely a big problem. I think it's kind of a twofold story. One, I wouldn't be surprised if a lot of the tech rally was funded via shorting the yen, right? I think there's been a lot of borrowing of the yen, and that was a highly levered trade, all based on the spreads between the yen and other currencies, which segues into the second part I wanted to mention, and that's the most central bank to ease. So the spread between the yen and these other currencies are narrowing, and that seems to be sufficient enough to lead to the rebound in the yen and the drop of other currencies against the yen. And you guys have heard me talking about that 4-year cycle coming due in the yen, and I think we're starting to see that now. And that's one of the reasons why I don't think the Nasdaq will make a new all-time high this cycle. It could even happen again next year, but going into year end, I think the Nasdaq's especially vulnerable, and the yen has definitely a lot to do with that, I think.
Yeah, I mean, if we see a pullback in the yen, a la we saw at the end of 2022, I mean, what does this mean for the market? I mean, look, I mean, we've if we look at the same kind of chart here, end of 22, we'd already sold off. I mean, it's kind of a messy chart there, but we'd already sold off a fair bit.
Yeah,
we kind of went into the whimper. The yen was the last thing to move, but in this case, it looks like the yen's the first thing to move in this decline of the last couple of weeks. And so to me, it's like if we continue to see strength, I mean, how does the market kind of rebound if we're starting to see outflows? Again, like you said, I mean, the carry trade does fund a lot of investment, particularly in stocks. We do have some earnings coming up this week. Microsoft, for example, it's been hit on the nose the last couple of weeks as well. We've got Apple. We got a number of companies that are big market cap names. About to throw in some PG in there, but Apple, Amazon, Meta, Microsoft. Is this going to be a repeat of this week from Google? Tesla?
they look vulnerable. I think.
Yeah, I was going to say, when we already talked about the fact that Google, got kicked in the teeth really, and then Microsoft has reacted to most of it. And I think the biggest players, the ones that ran up highest, are the biggest threat. And I talked about this in yesterday's video, that Microsoft and Google are heading further down, it appears. But we are stabilizing on those that were not the high flyers when it comes to AI. And I know that Gianni did a big class yesterday on it. And I just think that it doesn't mean we abandon AI because Google and Microsoft are getting, Google, somewhat Microsoft, and Microsoft possibly even more, are getting knocked down because they flew too close to the sun. Let's put it that way. And, but there's some of the other AI that didn't do that, like the Palo Altos and C3, that I think are poised for a bounce.
Well,
But
I think
don't know.
one of the things I kind of mentioned yesterday along the lines of AI is I don't want to jump ahead of here, but I think the new story with AI could come through the healthcare and biotech sector. So that's one thing I'm looking at on the AI front.
Yeah, I was going to mention as far as Google. I mean, the reality is, the earnings were good, right? I mean, they beat top and bottom line revenues, earnings per share. The valuation is not extreme for Google as it is, like, for example, like an Apple or Nvidia. and yet we're selling. I mean, it just seems like we're just like, hey, right now they're just out of favor, which speaks to the idea that the NASDAQ may not necessarily be the area of performance. But how do we move higher if we continue to see the drag we're seeing from these big cap names? Unless the slack's picked up, Apple, Amazon, Meta coming up the next week, we've got to see some performance from those stocks. If we continue to see selling, we see profit taking of those names, the market's gonna have a hard time. And at what stage do you start to see real liquidation? Because we haven't seen it yet. People are not selling, maybe shorting, maybe rotating out of certain names. We're just not seeing the breadth of selling that would normally expect with the kind of pullback we've seen, about 5%. We may have a lot more to go here, or does the market quickly pick up on earnings coming up next week? So Blake, you were kind of mentioning as far as some of the decoupling, Microsoft, Google, Palo Alto. And I mean, does something have to? I mean, Palo Alto, for example, CrowdStrike, the news there. Palo Alto is probably the more premier stock in that cybersecurity space. But so you really feel like we're going to be able to pick up in these names, even if the broader tech rally fizzles or
Well,
continues to sell
I
off?
think like you said, there's rotation, and where those had not gone up 10, 15, 20%, like the Nvidias, the Googles, the Microsofts, I don't think this, I think this pullback is healthy, reasonable, normal, mathematical, distributive. That's a hard word to say right now. But it's more just following its normal patterns. And so from just purely from a technical bias, that's what I'm looking at. And reality is if they didn't push way past their valuations, then they can be supported by their own fundamentals. I know that's a weird thing to think that we actually might see price action based off fundamentals, but cybersecurity doesn't go away no matter how much we get away from AI stocks. I just don't see us rushing away from protecting your credit card, your corporate systems, your cloud. I don't know, crowd. So I think that there's still a lot of safety in that if you're going to play that space.
And Johnny, like I've always been like, on track, OTRK, ISRG. I mean, these are more on that surgical diagnosis side as far as AI goes, right? So I never really kind of made that connection with biotech specifically. XBI is like an ETF that tracks the biotech industry. We're kind of testing highs here, but you have a number of stocks here that you're kind of looking at with regards to the next big market mover in biotech and AI. You got PTGX, MIRM, MYGN, and so again, how are we kind of tying in the AI story with biotech specifically?
Well, I think it comes a lot on the diagnostic front. I'm sure you guys have seen, reports out there on how, AI is sometimes doing a better job than, resident physicians in diagnosing diseases. And, I think that's a big part of it is if you are able to effectively diagnose something, you can treat it. And then, of course, there's the data compilation, the data amalgamation, and, just going through all that. Once these companies start leveraging AI, you mentioned the surgical thing too. Obviously, that's a big thing. I mean, but if I had to get surgery, I'd rather a robot do it than a human, right? But
and this company here, this company actually does diagnosis through AI, or trying to.
Yeah.
Clearly, they've not really succeeded. They had a little bit of a boost a few years ago. I mean, I can't see.
Yeah.
They changed their name, but anyway.
But it's just like the whole mapping out the
corner.
human genome thing. That's probably more efficiently done through artificial intelligence. That's once you
Yeah.
find the I guess the basis of it, let the AI do its thing.
So you're talking about in the development process, the use of AI.
Yeah.
So what's the one you're kind of looking at, or a couple of stocks you're watching the most right now?
Well, a few of the ones you shared have already started to make their move, which is nice. But the one on that list that I think is still basing and has a lot of potential for a breakout to come is Kura Oncology, KURA. I really like the pattern that's forming on that one. Trying to complete a higher low there, you clear that resistance, it could really surge higher. And it's not just an AI story here. A lot of these companies don't have a lot of revenue, don't have a lot of earnings. They're highly leveraged. We're going into a period of easing. Rate cuts should kind of give them some relief on a macro, front as well. So I think it's not just AI; it's a macro story as well. But I think it's the next big front for kind of that innovation story, and AI is the hot buzzword in that regard. So that's how I'm kind of synthesizing all that together.
Yeah, and I'm with you. I'm like, I mean, look, I mean, if we can, produce products, right? In this case, we're producing medications, and you can do it efficiently and be able to target the areas with which you're wanting to target. Again, you could maybe produce more efficiently, reduce the trials you have to go through. Yeah. And again, at the end of the day, it's profitability. And with these companies, profitability is a struggle, but it's the prospect sometimes of revenue growth that is ultimately holding these stocks together. So as we come up on earnings, those are some things to look at. They're probably not going to get to profitability, but if they can build a revenue story and a pathway to profitability, that's what they require. But right now, the revenue side of it and the development side of it, the approval side of it is what these companies need to continue to see the boost in the share price going forward here.
I'm totally with you.
All right, so let's take a look at so some bulls and bears. So again, Kura, what's another stock you're watching in the biotech space?
Let's look at Myriad Genetics, MYGN. I think that one still has some legs. It's starting to move out. If you look at the weekly chart, I think that tells the bigger story on that one. You can see how it's starting to move out of that rounding bottom pattern, so to speak. And, it's pressing right up against resistance there. And that thing clears. That's another thing I was going to say is a lot of these stocks have heavy short interest positions. So, they're ripe for squeezes. You clear resistance, and there's going to be a lot of shorts out there and a lot of pain. And that's just, fodder or fuel for the rally.
And that's a big note. I mean, sometimes it's not about always that, hey, there's a fundamental case to be made. Right. Sometimes, again, buying begets buying. As you see that kind of that positive feedback loop, shorts are getting squeezed, they buy, people buy in response to the squeeze, and you get that positive feedback loop that can perpetuate for a little while. Again, we're looking at maybe an $8 range here. 32 would be $8 plus, but targeting the prior high back here would not be unreasonable, right?
Yeah.
So in conjunction with this, I'm going to throw out an idea that I really didn't put. This is going to blindside you maybe a little bit. What about Blackstone, where they're buying Ancestry.com, buying a bunch of stocks in that realm of genetics?
BlackRock or Blackstone?
Sorry, Blackstone. Excuse me, Blackstone.
No, you said Blackstone first. You mean BlackRock?
Is it BlackRock and not Blackstone that was bought Ancestry?
Blackstone's the real estate company, isn't it? I think. Well, I guess they both are in real estate. I think it's BlackRock.
Yeah, I mean, Blackstone's just into buying stuff with cheap money, right?
Yeah. I'm gonna look that up real quick because who bought Ancestry.com? I can't remember.
I didn't know they bought Ancestry.com.
Yeah.
It is Blackstone.
Yeah.
So I was right.
Okay. Yeah, you were right. Blackstone. That was in 2020. Actually, it's been a couple of years.
Yeah.
Just thinking if they're divesting in some of the areas from real estate and putting things into things that are going to cross over. The fact is, Ancestry.com will now have the largest database of DNA in the world. And so at this point, what are we seeing? Are we seeing that, Blackstone is not, they have been real estate, but they're just, like Brandon says, just buy lots of stuff with cheap money. Aren't they the third largest, including Vanguard, as far as holding positions?
They're definitely up there.
Yeah.
I wonder when they're going to start, it's kind of like how they have the metaverse and like digital real estate. I wonder if they're ever going to try and do that with genetics. Like, we're going to, trademark your genes type thing, copyright your genes.
I'm just glad I didn't send my DNA to Ancestry now.
Yeah. Well, I thought I chose not to because it seemed really weird to have my DNA in a database. Yeah. So anyway,
this is a pretty significant breakout off the earnings. This is a multi-month consolidation range, about what, $16-17 we break out here. I mean, look, we're 150. That seems like pretty reasonable here. That's a prior fit projection, but
well, I took you off course. That was just something that popped in my head when you're talking about Myriad Genetics and the really the Human Genome Project and things that we've continually see expanding with AI. Yeah, that means they're going to have some divestiture into something like this now, I think.
So they're not going to just own your home; they're going to own your body. No, I'm just kidding.
Well, no, I mean,
what about biological warfare? What about
Right.
curing
Sure.
things? What about
Yeah.
attacking things?
Well, you have seen that come out, in recent years, how you'll see patents. I want to say it correctly. You guys might be able to articulate it better. They patent certain genetic sequences that are like generic. Are you following what I'm trying to say here?
The same,
It's
like
like,
they're repeatable in other people's.
yeah,
They're
it's like an
expressed in
RNA
other people's
sequence.
genomes.
You kind of saw that emerge during the whole COVID fiasco. So yeah, I do think that is a big frontier. Is the whole mapping out of human genetics. If you have a certain genetic disposition, there may be some sort of RNA patented treatment that can modify your DNA to prevent some sort of disease, and that's genetic real estate. Let's call it.
Right.
Yeah, they get in front and they already have the cure or the
Right.
patented virus type injection or vaccine type injection. Yeah.
You're telling me they don't need to shrink somebody down and inject it into your system like inner space? I'm like, come on. Wouldn't that be more feasible?
Or it's
Like,
like the magic school bus, right? The magic school bus when they would like go into the bodies, or what was that? What was that one movie with Osmosis Jones? That's a
newer version, but like back
Yeah,
in the 80s,
yeah,
Dennis Quaid in Inner Space.
Yeah.
Brandon, we were old before he was young. Anyway, so he doesn't know what we're talking about as far as inner space.
But so as we're looking at opportunities, I mean, there are bigger themes playing out that maybe just push off the market's concern. And the reality is, I mean, biotech's small enough. I'm like, it doesn't take a lot of flows in there. And again, you get short covering to let it keep perpetuating on its own, regardless. I follow the option market a lot. There's been a lot of bearish option activity, just hasn't really played out, but it could just be hedging, right? Mm-hmm. Just hedging long positions in the space. Again, maybe expressing some degree of concern, but it has not really manifested itself in downside activity. But one area that again I've been watching in terms of, we're getting to bulls and bears now, but that I've been watching the last couple of weeks has been refiners. VLO broke out today on earnings, but there's been a strong current into, sorry to borrow your term, Blake, but
you're all good.
Call option buying in the last couple of weeks. We finally got the breakout in the earnings yesterday, and the follow through from PSX and MPC, other refiners out there. But again, this is one area that I'm looking at that says, look, I mean, if people are still driving, they're consuming gasoline to travel. But right now, the drop in oil prices, it's opening up the opportunity in refiners.
And I think that Oxy and some of the others energy sector, they've pulled back pretty good, so that cheap.
Yeah.
I mean, we shouldn't be this far back up after that pullback. Oh, look at that nice higher high, higher low there.
Yeah.
One of the
companies
themes
like
I
Exxon,
found,
they do everything, right? Soup to nuts. So again, I'm still looking at the energy space as being a strong area I'm expecting to move. But again, we finally saw the breakout in refining. I've been kind of talking about the last couple of weeks.
One theme that I saw kind of emerge over the last few days was offshore drilling. So you got DO and SDRL, Diamond Offshore, and Seadrill.
Seadrill, yeah.
Those are shaping up pretty nicely. And you even had Oceaneering had a big breakout yesterday after its earnings, OII. Yeah. So yeah, I'm with you. I think there is a big story emerging on that front, regardless of the short-term direction of crude oil.
Yeah. Rig is one I will look at. It's more of an oil service type company, but deals with offshore. We finally got that higher low, kind of a breakout on higher volume yesterday ahead of the earnings. But Diamond has definitely been a strong performer, OII. So again, you're getting these movements in the energy space. It's just not as broadly held. I mean, Devon kind of began to break down last week. So the producers themselves may not be the best source. I was looking at XOP. It's back at support, but it failed on its breakout back here and then drifted lower. Yeah, but the offshore stuff, again, I think that seeing, refining companies break out this week. Again, Blake's been up bullish on Oxy. It's back at kind of the support level again as well.
That's
just brand new. Excited to watch Oxy. Uncle Warren,
you and
that's
Warren.
Right. I actually was really mad at Warren for that one, but that's another story for another time.
So Blake, you've got some some industrial
Yeah.
type companies you're watching
Yeah,
right now.
and I just think industrials have made a nice little rally multiple times in the sell-off, and so I like the as you know, I always go back to tractors and tanks. So I like looking at the Northrop Group.
Death and, well, production.
Food.
How about
Yeah.
that one? Death and
So
production.
The circle of life.
deer and doom. So
Thank you, Johnny.
yeah, so Northrop and RTX, you know, Raytheon and Deere and Caterpillar are kind of the ones that I think it's too late to chase that one, certainly. But I did comment it on yesterday and before the breakout. So I think the breakout was obviously just great.
Well, and
but
these are names you've had Raytheon on our list off and on for a while, right? Just
yeah, Raytheon and Northrop. And yeah, so I talked about being bullish on it, still talked about it being bullish, and they just happened to have their earnings yesterday and just kicked it into high gear. So
it pays to, anyway, whatever. But I mean, look, we're certainly looking Northrop, for example, retesting prior highs at 490. Raytheon, again, this is new territory, at least in the most recent pass. Is this an all-time high here? But look at this. We're staging a major breakout above multi-year highs just this week. So, you know, we may see a little near-term pullback on this, but look for the gap level to hold or look for it to take out the high. I mean, both those areas, bounce off support or break above resistance, can create opportunities both near term and really long term as well. I mean, yeah, we've seen a lot of appreciation here, but these gaps are pretty significant.
You know, one you might be interested in since we're discussing earnings in that front is Leonardo DRS, ticker DRS. That one's been strong all year.
So DRS, we look at it here as provides defense electronic products and systems. Again, destruction. It pays, right? I mean, in the military side of it, it pays. So how do you guys? So how would you kind of play a trend like this? And we do have earnings coming up here in a couple of days on the 30th, early next week. Do you just hop on board and ride it, or you look at options as a way, or what? And this may not really have much liquidity there, but
yeah, I don't know if it has much options liquidity. It is an Italian company. I think they're trading a lot of derivatives over there.
Could be, huh? It's a little bit of bias there. No, I'm just kidding. But, you know, like, I mean, look, we get this kind of downtrend like this. I like to take, I call it a seed wave. It's not my term, but I call it a seed wave. But if you take the end of the move, go back to the beginning of the move, you draw a projection. We're really just kind of that third, kind of the first stage, the consolidation phase, then the rally phase. I mean, the strength of this could carry it up to 33, which, you know, $5 move is not a bad deal. Close to 20% movement, just projecting to that 261 level. And you got a clear level of support here too. Just might wait for the earnings, but if we kind of hang on to this area, we may break in 33, maybe even as high as 41 here, just based on the initial rally. Yeah. Let's turn our attention to bears here. I threw out a bunch of just interest rate sensitive. Johnny, you mentioned as far as, again, the long end of the yield curve is not catching a bid with these increased rate expectations. We're looking at 3 rate cuts this year instead of 2. TLT is not really participating in terms of a rally. And so I'm kind of looking at these areas. PayPal and Square kind of broke to the downside last week, which was good for us, right? Those were 2 areas we're looking at bearishly. But do you want to kind of expound on that notion there?
For the yield curve or the yeah. Well, this is the moment of danger, guys. Quite frankly, when you have the re-steepening unfolding, that usually means that you are susceptible to a recession of some sort. So you're seeing big bids come in on the short end of the curve, especially on the 2-year Treasury seeing a nice bid. And, you know, we want to see the yield curve re-steepen, right? But this usually coincides with the economic slowdown. You know, the yield curve's been inverted now for its longest time in history. I'm not really in the camp that we're about to go into the.
Oh, I lost you, Johnny.
You just froze.
Johnny just froze up. He's not in the camp that going into, and now he's been cut off forever. We'll see if he comes back.
So, Blake, do you have any thoughts on the yield curve right now? I mean, again, we're not seeing the kind of punch in bonds, long-term Treasury bonds, and notes. TNX would be a note, but we're not seeing the buying punch in Treasuries right now, despite the increased rate cut expectations.
Yeah, you know, there's only how do you solve a yield curve? How do you solve a problem like the yield curve? That's a little Sound of Music reference to you for you. But you have to push the short-term rates down or the long-term rates up, and it's just not. It doesn't seem to be doing it. And I cannot think of a time that we've had 18. What are we at? 20 something months now with an inverted yield curve. I don't know if that's ever happened before, ever. And so we actually may be over 2 years actually since we've inverted. I think it was August.
Well, we can draw kind of a. We'll go a 10-year and the Treasury. See, kind of
so it's to me, it's we can't fix it yet, and it's not going to be fixed at this moment. And I really am still not betting on those rate cuts. I don't think they have the ability to push it that low, and the 10-year Treasury yield is fading as the rate cuts are being talked about. So that means we're going to become even more dramatic in that. Well, they're going to chase the longer term. We're going to chase the shorter term down, and so I just don't see us fixing the yield curve yet.
If they were to cut 75 basis points, I mean, could spur a little bit of an inflation. We got PC came out today. It was a little bit better than expected, but we could see some move in a long end. But if they continue to push short-term rates down, this could get us back here. We're about 1% right now on the 10-year versus the 3-month T-bill. So if they cut 75 basis points, maybe 100 basis points, we could see an uninversion of the yield curve, basically creating a flat yield curve. And again, that's a signal of recession, right? I mean, if we see this back up the truck and get back above into positive territory here. But did you want to finish up your comment on the yield curve, Johnny?
Yeah, I was just going to say that cutting rates on the short end of the curve, increasing M2, those increased inflation expectations are going to be felt more on the longer end of the curve since it's more susceptible to those changes.
Yeah, so again, I've been kind of watching for this, but again, we're about 100 basis points between the 10-year and the 3-month T-bill. 3-month T-bill is significant in that it's pretty much tracking where the Fed funds rate is. But I think you also mentioned this too in the notes, and this is something I talked about the other day. Is there a trade right now in short-term treasuries? I mean, again, if you're looking for pseudo cash, it's not pure cash, investing in treasury bonds, but boy, it kind of looks like if we look at the 3-month T-bill, 1 to 3 year treasury note ETF like SHY, I'm going to expand this here to 10 years. But if the Fed starts to cut and we start to tip economically, they go back to ZERP. I mean, there might be a $4 move, 5% move in SHY, for example, if that were to happen. I'm not sure. Not a lot of downside risk right now.
I'm with you. I think the most money could be made, 1 to 2 years in the treasury market.
Yeah. So this is the 1 to 3 year treasury, kind of fits that duration. So again, I kind of talked about this the other day, is that if the Fed's cutting rates, if we're really cutting 35, but we're starting to price it in right now, but this has a chance to really make some moves. And again, it's not a very volatile product. So again, you have a very low risk, potentially high reward scenario. If the Fed's not going to continue to raise rates, if they begin to cut rates, we're going to stay down here, not go below 81 if they don't raise rates. We may push hard towards 86 if the Fed begins that rate cutting cycle and we get towards ZERP. This was something I talked about in 2018, playing the rate cut. And if we start to see it eventually, if we start to see the downturn economically, this is the secondary move in long-term treasuries where you could see a big move there. But initially you see it in SHY, and that's where we're at right now.
I'm with you.
Blake, so we got kind of the bearish side. Oh, shoot, I forgot to update it. Rio, Qualcomm, AI, those from last week.
Yeah, and Rio and FCX, I think if we are really unwinding the expectations of inflation and planning on rate cuts, I do think you're going to see your metals and miners struggle. We already see a major drop in copper, which is going to dampen their ability to profit. So we don't need to take a lot of time. I'd like to get some more insight on Gianni. But yeah, if we're really pricing in that rate cut, then we're also in the same moment admitting that we're not worried about inflation.
And again, growth is flagging, right? We're cutting rates in response to a diminished economic outlook, essentially.
Yep, we are planning on negativity, and so that's, to me, I just think you can start fading the miners, and so FCX and obviously Rio are probably my two favorites to trade. But I mean, Newmont, we could do Newmont and Nucor, but yeah. Anyway, I do think they have a lot of room to fall just to match gold's pullback. So
That's interesting, Blake, because I'm a little more constructive on gold and silver versus copper. I'm with you on copper. I think copper is very bearish, but so I guess my question for you is, are you linking the prospects of gold and silver to, economic performance right now, or do you think
yeah,
bad news is bad news for gold and silver?
no, well, I just think that FCX and Rio are primarily
Oh
copper.
yeah. Yeah,
And
yeah.
so
Sure.
they're primarily copper, and I do think the fact that gold is fading and economic growth is fading, and I do think you're either going to get stagflation or you're going to get a major market downturn, and that's going to cut into the margins and what the way we've overpriced, uh, potentially overpriced some of the gold stocks. But yeah, I mean, Rio's obviously way down, but I don't see that we can't continue to go back down to 60, if not even all the way down to 58, if copper is falling back to its multi-month and year lows. So no, I think you can't price in rate cuts if you think inflation is still high and without having gold follow it. So gold's down, silver's down, copper's down, and if gold breaks its support, I just want to be betting against the miners. It's purely based on the miners.
Yeah.
Their margins will get squeezed, squozed, crushed since it's mining. There you go.
I like squozed.
I mean, gold for me, it's a reflection right now that the dollar is strengthening in real terms. It may be losing a ground against the yen, but there is also a dollar carry trade. So
Yeah.
if the yen carry trade's unwinding, does the dollar trade unwind? Do we start to see stress strengthen against the euro, for example? That's a scenario that may play out. And again, that's bearish for the market overall. If the Fed starts to cut in, starts to create more of that reflation, gold and silver may perk back up again as the dollar starts to exhibit weakness. But right now, in the selling, the dollar strengthening, which you would probably normally expect. So again, right now, I was bullish on silver, constructive on gold stocks. We got the bit of a pop, and then we're just seeing the reversal right now. So this last gasp, and then where the air is just coming out of the balloon right now, is the dollar strengthening in real terms versus relative terms.
I'm with you.
We are running down to the time here. We've only got a couple of minutes, and then really we're kind of over. So parting shots, Gianni. I mean, we kind of wanted you on here after your stellar performance in the AI discussion. I know you have a mastermind coming up, but parting shots from you. What do you think?
Well, it's all sector rotation, and I think we can't take the outperformance of tech for granted anymore at this phase of the economic cycle. Tech is a leading indicator for growth, and I think based on the sell side action we've seen, that is the market telling you what the prospects for growth are in the coming weeks and months, and ignore that at your own peril. That's the big takeaway from today, going into the final trading week of July.
There you go.
Well, so we get a warning as his parting shot.
Yeah.
So be careful, everybody. It's going to be a wild week next week. We got a lot more to come. Thanks, Brandon. Thanks, Gianni. We're going to get out of the way so Don can take over and start the day.
Thanks, guys.
Everyone.